Good morning, everybody. Welcome. We'll give everybody a few minutes to file in. Hope everybody's having a great morning, staying warm, depending on where you're at. A little chilly in East Tennessee today, so. Good morning, Melanie. Good morning, Butch. Good morning. Just give everybody another minute to file in here, and then we'll get going. Good morning. All right, we're going to jump right into it. Big days coming. I don't know, George. Let me know why you think a big day's coming. So, all right. Good morning, everybody. This is Michael coming to you from Game Edge on Tuesday, December. Oh, red Fed decision. Yeah, I think it's the most telegraphed Fed decision we've had for I don't know how long. So we'll see. All right, it's Michael coming to you from Game Edge on December 9th, Tuesday, December 9th, with a pre-market prep session. Good morning, Will. As always, we'll cover our three pillars: sentiment, structure, and trend, and then we'll take some individual equities at the end, and we can check out our web app. So let's go ahead and jump right into it. A market trend model. As quick orientation, this is based on the tick index. The bolded white CT is our intraday. Instantaneous as what we call cumulative tick, just indicating buying versus selling in the overall market. Pretty significant selling via institutions yesterday. Up here with the filtered cumulative tick, this is larger block orders, plus 1,000, minus 1,000. Again, significant to the downside there. As you've seen really the past week, it was above zero or slightly around zero. Our breadth indicator, new highs versus new lows, obviously dropped pretty significantly, indicating that stocks, new highs on stocks were not completely outpacing new lows, just by a smaller margin than we historically seen the past few days. So quick takeaway is short-term weakness via the bolded white CT, moving to the downside under our shorter-term momentum moving averages. So until this gets reclaimed and moves back to the upside on a shorter term, I'd be looking for a little bit of weakness. The colored ribbon is still in a positive slope to the upside, and the red above cyan. So as long as this is maintained, we're still entering positions in our mechanical portfolios. So our trigger is still turned on. So our P-chance, PGX, as well as our wheel strategy, still entering positions. Historically, what happens is we'll come down and test the colored ribbon. And if we're going to maintain our longer uptrend, then we'll start moving back to the upside. We may even slice into the ribbon a little bit, but then move back to the upside fairly rapidly. So we'll watch that day over day. Obviously, significant news on the horizon, FOMC tomorrow. And then we'll be heading into the December OPEX and well as CPI into next week also. So some news on the horizon, obviously into tomorrow. I would anticipate some consolidation, just choppiness action today as we head into that FOMC meeting tomorrow. All right, let's move on the SPXA. Obviously, we look at the SPX options complex because it's largest and most notional value. So this gives us an idea of where market participants are positioning. We separate, this is the SPXA. This is the December contracts. This is institutions and how they're positioning, still call dominated above and below spot price. Obviously, we do see the speculation to the upside kind of waning a little bit, but significant support to the downside. So that's why we continue to see all these pullbacks being supported and bought. So we'll maintain that overall status and thought process and thesis until we start seeing this green net delta below us erode, and we see out money puts overriding this green net delta. And you see the charms also significantly supported to the downside, but we see 6,900 to the upside really is that overhead ceiling that we continue bumping our head on. So call dominated from institutions. We continue to look for pullbacks to be supportive and enter as well as the market trend model is indicating that. All right, SPXP, all expiries turned on here. We're call dominated. Key takeaway here is extreme choppiness and positioning within this overall structure here via the net delta. You want to see either green all the way to the upside and green to the downside. That would be obviously call dominated and supportive. But as of now, we have red intermingled here. So this is out of the money puts below spot price as well as some in the money puts overhead. So just kind of a messy overall structure here. And that's leading to the significant choppiness in the market that we're continuing to see between 6,800, 6,775, and then to the upside 6,900. So thesis would be that we'd continue to chop in this zone until we clean up this structure. That may be post FOMC, that may be through December OPEX. We'd like to see all this totally green to the upside and totally green to the downside as supportive. Or if you're going to be a bear, you'd want to see in the money puts overhead as red, as well as out of the money puts all the way to the downside. So takeaway call dominated should be supportive, but just a messy structure within this overall range that we continue to chop in. Pretty much for the beginning of December, end of November to the beginning of December. All right, let's move on let's put 0DT towards the end. Let's go ahead and move on to the SPXP GEX ratio. Again, this is like a put call ratio, but we add a gamma, which is a time component. And then this is basically short dated call versus put gamma. So we want to see that GEX ratio continuing to rise, indicating out of the money speculation within the overall market, but we continue to see it to fall. We said this would resolve one of two ways. If SPX GEX ratio was moving to the, or SPX price was moving to the upside and GEX ratio continued to drop, then we would see either spot price come down and start meeting that overall change in the structure and positioning, or we'd see the GEX ratio change and start moving back to the upside, indicating out of the money call speculation. So what has happened is obviously the GEX ratio continues to drop, and now we see spot price at least consolidating and starting to drop a little bit. And we're still just above that one, so we'll give an edge to the bulls, but we're at the pivot point where this could drop below one, indicating short dated put gamma could start controlling the overall complex. So we're really at a transition point or a flip point within the overall structure. So we'll continue to watch this day over day. All right, moving on to the delta balance. This is structure and positioning above and below spot price. Green dotted line is above spot price. Red dotted line is below spot price. And then the overall aggregate is the blue dotted line. So you notice the green dotted line, just what I spoke about, the out of the money speculation continues to drop. These are your out of the money calls as well as in the money puts. And the red dotted line is your in the money calls below spot price as well as out of the money puts. So the red dotted line continues to drop slightly, still above zero though. So bulls are maintaining the left-hand plane, right-hand plane dropping below zero. So bears are taking over the right-hand plane, which is that out of the money speculation, which leads to the spot price pushing into overall significant headwind and not being able to appreciate to the upside. So and the delta balance obviously dropping here, also indicating that the bears are starting to control the overall complex, but just not in full control yet, as we're still above that zero line. Now we do see a recovery post FOMC, and then we see some weakness creep back in towards the monthly expiry. So again, we'll continue to watch this. This is basically the left-hand plane that is indicating the most weakness, right-hand planes being maintained into the monthly expiry. So again, we'll continue to watch this, but just cautionary as we head into today, we're starting to see some weakness in the overall structure to the upside, to the downside, supportive still within the money calls below us. All right, let's move on to the SPXP 0DT, put dominated. Above and below spot price, as we just discussed, drunken sailor range 68.75 to 68.25. Most likely will be stuck within this choppiness range unless we see a significant out of the money call speculation via our vol-m command. That's call versus put speculation, and we see both those centroids rising. But again, choppiness price action within drunken sailor range. We have our stated if-thens today for our transition area. If we're above transition, we'd be in a more bullish overall thesis and stance for a move up towards 68.75, as indicated by the arrows. If we're below transition here, then obviously we'd be indicated for a little bit more cautionary and weakness stance towards 68.25, where COTMP is sitting, and then below 68.25 would be looking down towards 6,800, where we do have a significant charm support down towards that 6,800 level. So again, these new updates to our web app really allow the user to visualize the charm supportive type action, where the gamma, the speed of the move, continues to increase and where it starts to decrease, and then where the net delta positioning is also. And you'll notice 68.45 overhead, significant. If we're below that level, it may be difficult to move above depending on what the the intraday call versus put speculation is. So that's the trading plan for today. I'm still leaning towards more choppiness price action between 25 and 75 and just bouncing around. And then if we're above transition, we look for a move up towards 75, below transition, move down towards 25, and then ultimately down towards 6,800, where I would anticipate that to be supportive for the day. All right, moving on the SPXP net stack command, high sensitivity levels for today. This is where we'd look for that price action or reaction. 67.50 below us in the money calls. I said 6,800 on the charm level. That would most likely be supportive of those out of the money puts decay, as long as we're above that level. And then overhead, we do have 6,900. That's a pretty far distance away, but those out of the money calls, again, will continue to exert their force of charm headwind. And you can flip back to our web app. You see where the charm really starts to come in. As I said, 6,900, but really all the way up here, we have some headwinds, not significant of the 6,900, but those will be headwinds if we're below those key levels. And you see the gamma there also. And then the Vanna, if we do see out of the money calls come in and volatility drop, this could provide a nice tailwind for a move up towards 6,900, but then a 6,800, as I said. If we get below 6,800 and we see out of the money puts coming in and volatility spike, then obviously it would be significantly more risk off, and we most likely see the market trend model indicating that risk off also. So with that, thank you for joining us. GameEdge.us. Click on the newsletter, put your email in. This is where you'll be delivered on the weekends, all of our thesis tools and how we navigate the SPX option structure. Another thing that's a great reference point we've been posting on X is our blog. We have significant education posts about all of our tools and how we look at the overall market. We've got some great feedback via the blog and people reading our education articles there. So make sure you come check that out. And then as always, we could go over individual equities via our new web app. Taylor, one of our other team members, posted a nice 5-minute overview of the updates that we pushed for our web app, and we're continuing to evolve those updates. So make sure you check that on X. And like and subscribe on X and YouTube. You'll be notified when we go live. I may try to do a live open like I did last week, and I think Taylor did a live open yesterday also. So let us know if you want us to continue that. If our time allows for our team members. So, all right, with that, hope everybody has a great day. I'll be happy to go over individual equities. If anybody wants to look at individual tickers, just throw them in the chat there in YouTube, and we'll go ahead and look at those. Everybody always asks for Tesla, so we'll quickly just go over that one. Friday expiry, call dominated above and below spot price still. Spot prices within the overall transition area, though. NVIDIA, Apple, and Tesla. Yep. Within the overall transition area, 470 to the upside still looks good. Speculation still looks good to the upside for Friday expiry. Selecting all, we have 500 still to the upside. Looks to be that speculation level. Tesla still looks great. I really don't see anything wrong with Tesla. NVIDIA, call dominated, 190 to the upside. I know it got a bump last night on some chip news. So everything looks good. 200 most likely would be that target to the upside that I'd keep watching. Friday's expiry, 190, call dominated. Nothing really changes. Oh, actually, the structure moves up into monthly OPEX. So again, speculation to the upside on NVIDIA. Everything looks good there. I wouldn't really change my stance on that. Apple, call dominated, 290 overhead, COI 300. This Friday's expiry. 280 to 287.50. So peak X is 280. So that might be the upside target there. And then structure advances to 300. So Apple looks good also. Really no change there. Soxel, I don't think we have enough. Oh, yeah, we do have enough options on that one. Call dominated, 50 to the upside would be the speculation area I'd be watching there. Friday expiry, 50, peak X, COI. So 50 to the upside on Soxel. Everything looks good on that. SOXL, sorry. MU. Call dominated, all expiries turned on, 250 to the upside, peak X COI. Let's see what this expiry looks like, 250, and COI actually drops to 240. So 250 looks like a cap on price. 250 into the monthly OPEX. So after monthly OPEX, structure stays at 250. So that would be that upside cap. MU does not look like it has significant upside after this expiry. Visa 350 and 400 to the upside. Very interesting. 337.50, 337.50 PGEX COI on that one into Friday's expiry. Monthly expiry 340 and 350. So structure continues to advance after monthly expiry up to 340. So I think we do have a runway for V also. So sound good? Went over those pretty quickly, but if anybody has any other ones they want to go over, be happy to check them out. All right. Thanks, everybody, for joining us. Like and subscribe on X and YouTube. You'll be notified when we go live. As always, share our content. Our community continues to explode with followers on social media, as well as joining our Discord. And we are a member-driven community. All the updates are to our web app. We do have a Game Edge team, as well as developers, helping us process. But again, we take all of our suggestions from our members and we try to incorporate them into all of our tools. So it fits everyone's trading style, depending on if you're just TA or if you're an options trader or a swing to intraday trader. So come join us. We'd be happy to help you get up to speed, navigate the SPX option structure, as well as individual equities. As always, manage risk today, and everybody have a great trading day. Thanks. Bye.